Hello Singapore, my name is Russell Markham, Director of Marketing for Asia Pacific. In a few seconds I will show you how VectorVest Singapore could have saved you a fortune on some key shares. To do this, I'm going to click on our Graphs tab and view 4 shares. So I move over to Graphs, and on this tab here I've loaded in 4 shares. I've put in Blumont Group, Asians Capital, Lion Gold and Ossia International. The green line depicts the current price that the share is currently trading at. We can see now it's currently trading at a low value. But we're going to start the analysis towards the end of September. So let's bring it back to the 30th of September. You can see that at that point in time, Blumont was significantly overvalued compared to its valuation. Value is a measure of a stock's current worth. VectorVest calculates this from forecasted earnings per share, forecasted earnings growth, profitability, interest and inflation rates. Value increases when earnings growth rate and profitability increase, and when interest and inflation rates decrease. VectorVest advocates the purchase of undervalued stocks. At some point in time, a stock's price and value will converge. So we can see at that point in time, the share was significantly overvalued. Same too for Asians Capital Limited. It had a price as of the 30th of September last year of $2.70. The value was 20 cents. Lion Gold significantly overvalued, and so too was Ossia International Limited. If I move back up to the top of the graphs here, let's pull the chart forward. We can see that price converged onto the valuation. We can see that weeks prior we had been noting that a significant premium was being paid for the share. If I move on, same for Asians Capital Limited, we would have known weeks prior that we were paying a significant premium for that share. Lion Gold, months in advance, we had noticed that the share was significantly overvalued. And same for Ossia International Limited, we certainly had plenty of warning. Now, one last thing I want to also note to you is if we look at these shares in mathematical format, here it is. Here are all the valuations that we assign to our shares. I've loaded in these 4 particular shares. I just want to comment on one column here, RV. It's on a scale of 0 to 2. RV is an indicator of long-term price appreciation potential. It stands for relative value. And this indicator is far superior to a simple comparison of price and value because it's computed from an analysis of projected price appreciation 3 years out. If the value is well above 1 or above 1, then we say you're better off to hold that company rather than buying a bond. However, if the RV is below 1, we are noting that you're better off to hold a bond rather than this share. You can see over here we had very, very weak RVs back on the 30th of September 2013. Now, if this is of interest to you, do come and see me. I'm in Singapore next on the 1st of March. Look forward to seeing you and exploring the many great opportunities that VectorVest will show you at the workshop. Thanks again for attending this short presentation, folks.